Hi everyone, this is part 2 and the final part of our show with Stephen, so please listen or watch part 1 first, which is linked in the show notes and video's description. If you enjoyed this podcast, please subscribe, like, and share so we can spread Bitcoin education to other people like yourself. BitcoinProsperityPodcast.com.
The reason why I got interested in Bitcoin is for a store of value. It was really because of the peer-to-peer cashless electronic delivery of buying of goods, right? So that's what I really believe in, and that's where I think the best use case of Bitcoin is.
Welcome to the Bitcoin Prosperity Podcast with your host Gordon, that's me, and Faris from CoinCompass.com, enabling you to safely buy and securely store your Bitcoins. All resources are in the show notes and description, including our full disclaimer. Visit BitcoinProsperityPodcast.com to subscribe and discover other free content. Now let's change tack a little bit. Unless, Faris, do you have any more questions? Because you know me, I'm going to get technical. Okay. So have we properly introduced you, Stephen, CIO of Exponential?
Oh, yeah.
Yes.
Okay. Yeah.
So looking at your Twitter feed, Exponential's got a digital asset fund, I think it is, a conference going on at the moment. Our audience, I would say, are mostly non-investors. So could you say, for example, give us a definition of what a digital asset is and perhaps how that's different from, say, a crypto asset or a token or a cryptocurrency?
Yeah, that's right. Well, one of the reasons why I left traditional financial services to explore the wild world of blockchain and Bitcoin over 4 years ago now was because I saw the potential of blockchain. I'd seen the potential of Bitcoin for years as a digital currency, but blockchain itself, particularly when I was investigating the Ethereum network, was quite interesting. The ability to use smart contracts and apply them to things like bonds, because at the end of the day, I started my asset management career in fixed income, and I can't help myself always go back to it. But bonds are actually a largely inefficient market. It's not like equities where most public equities are trading on an exchange, and there's a lot of information flow and they're easy to buy and sell, at great increments. But fixed income is typically every bond is different from the next bond, even if it's from the same issuer, and it makes it very difficult to manage it from an operational perspective, right? So if you could actually apply, if you could put a bond on the blockchain and apply very simple very, very, very simple concepts that have been creating, through the Ethereum chain with smart contracts, you can actually manage them much better. You can make them a lot more efficient, right? And to get maybe too deep and technical, a lot of people think about bonds as the Barclays Ag and benchmark bonds of $1 billion or greater in issuance, and big companies that everybody thinks about. But the biggest inefficiencies are things like U.S. municipal debt, sovereign credit, emerging market credit, where you might have a tiny country that only wants to issue $200-300 million in debt, and the big boys don't want to touch it because it's not benchmark. So they have to pay a lot more money, number one, to distribute it, number two, in their coupon. So even though they might have a better credit quality than, say, a larger country, their coupon might be 2 to 3 points higher. And you're reliant on, maybe 5 to 10 fixed income shops total that will even traffic in those types of bonds. And they usually take the whole thing. And I worked at a shop that's what we did. I ran, emerging markets and sovereign credits for a while. And I only looked at things that were non-benchmark, really juicy, really illiquid, but high quality as a value investor. But if you can eliminate that, if you can make these things, number one, smart contracts make them a little bit more understandable and manageable. Number two, they can be fractionalized so that people can actually buy them directly and gain the benefit of the high coupon rate for the credit quality. You actually make things better for people that are investors, the general public, as well as for the issuer. So I know I gave you a really, really long story on where I see the benefits are, but that's an example of a digital asset. It's an asset that comes from traditional markets, traditional finance, things that people understand. They can feel them, but they're simply put into a more efficient manner through electronic trading and on the blockchain. So you can apply that to private and public equities. There's a lot of inefficient equities out there as well that trade OTC or on some ATS. There's bonds, there's commodities that can be more efficient. Real estate is another area that can become more efficient as well in a fractionalized manner, as well as venture. Venture has a really interesting risk return profile, as well as private equity. So what we've decided to do is listen to a lot of institutional investors that we've talked to really over the last 4 years, whether together or separately. And a lot of pension funds and insurance companies and endowments and trusts look at things like Bitcoin and cryptocurrencies and there's too much there to understand. There's too much risk in investing in a Bitcoin fund or a cryptocurrency fund and letting somebody manage it. It could blow up. It could go to zero. It could, I don't even know what the thing is. But what they do understand is real assets that are fractionalized and that are electronic. And so we essentially created a fund that does that, where we can make allocations to venture, to real estate, to stocks, bonds, commodities, even crypto assets if we want to, like Bitcoin. But that way it's not 100% in crypto assets that cause a lot of strife and grief. Second of all, we actively manage it so that we can make allocations to the sectors that make sense and not forced to buy real estate because we have to, but because it's of good value. So that's really what we've created in this digital asset fund.
Just to drill down on that a little bit more, you mentioned fractionalization. Everyone talks about how they're going to buy a 10th of an apartment or a 20th of an apartment or something like that. Is that the real use case, or is that what you're talking about, or is there a bigger picture there?
There's real estate is tough, right? There's a lot of people that have tried it over the last 2 years. There's actually pretty efficient ways to buy what I would call fractionalized real estate, especially in the US. It's tax efficient, and that's buying a REIT. But there are private real estate deals out there that do make sense from a fractionalized standpoint. What I care more about are things that are of good value that professional money managers are buying that we want access to. And I'll give you a good example. In the US, we had this thing called Build America bonds that came out in 2010 that was really meant to get people to start buying municipals again. And Build America bonds were essentially where the federal government would pay a portion of the coupon that the munis or the municipalities couldn't. And in the US, there's all these tiny little municipalities, they're little cities or counties or even states that don't have a lot of paper to issue. Some of them, are bonds that support local schools or water or electric. But the very first Build America bond that came out was actually in San Diego, and it was only $25 million. So you're not going to find like a PIMCO or BlackRock that are going to buy a little dinky $25 million bond. But the people that live in San Diego sure probably want to buy that bond in some way. So you could take that bond and fractionalize it and benefit the community and benefit the bondholders at the same time and be tax efficient. So those are probably the best use cases right there.
And is that what we're talking about? I mean, this, to me, one of the massive use cases is you don't have to be an accredited investor. You can get into some of these other markets, some of these private markets, and it's accessible to everyone. I know we all saw the ICO boom in 2017. But to me, there's obviously that use case. But there's other use cases as well with digital assets, stuff like micro lending. Bringing other kind of illiquid assets. I mean, I guess real estate, you can't just go onto an exchange and sell your house within 5 minutes. That seems to be a real use case as well. Sort of, I don't know, enabling this sort of investment for everyone.
Yeah, I actually really love microlending, and it's actually something that I've been both studying and involved in for the last, I don't know, 15 years. Whether it's I was involved in microlending in the Philippines, and a few other places. And what really turned me on to microlending is looking at what's happening in a lot of emerging market countries and seeing that, people's lack of access to credit is really what keeps them in poverty. And as long as you're responsible with your credit, and also in a lot of societies, pride is what stops you from defaulting on that credit. You're gonna work hard to make sure that you pay people back, but stories of how people work all day long just to sell something, and hopefully they sell it so that they can then buy more materials to build it again and buy a bowl of rice. Lending at reasonable rates makes that possible, because typically people are borrowing the supplies that they need to make something at very high rates, 25, 30%. So microlending makes a lot of that possible. And going around the world, most people have a phone, right? So you can simply digitize microlending to really support a lot of localized societies. I mean, it is one of my favorite use cases of digitization.
Yeah, I couldn't agree with you more. And we're actually talking to Leah about this because she's worked with the World Bank. I've had experience with Mohammed Yunus's Grameen Bank. He was the first one to do microfinancing in Indonesia. And you just think, like you just said with Bitcoin, you got half the world's adult population don't have access to a bank account, but there's 7 to 8 billion mobile phones in the world. And yeah, $20 to us is nothing, but $20 to someone in the countries you just mentioned, that's the beginning of an empire to them.
Yeah. I mean, and look, Mohammed Yunus is actually the person who turned me on to microlending when I read his book 15 years ago. And he just very, very well put. And I think this is the best possible use case to for good humans that want to make the world a better place. I think it's a fantastic use case.
Absolutely. Whatever happened to, just going back to ICOs, whatever happened to ICOs? Are we now at the STO, or there seems to be a lot of exchanges doing IEOs? What's going on in that space?
It's funny because I actually absolutely hated that whole movement. Everybody launching an ICO. It's like, there's a lot of companies out there that were, trying to get money quick because they couldn't get it, through traditional channels. And I understand why they did it, right? Not everybody has access to Silicon Valley venture capital. Not everyone has access to wealthy angels and family offices. But at the end of the day, that's really all it was. It was simply, it should have stayed right there where it was, where, typical reg in the US, typical Reg D, 506C, 506B offerings, for seed and Series A investment, and you're simply, doing it online with a token. I think that's great, but to say that it's not really security, and I'm going to kind of bend the rules and I'm going to do what I want, that's where a lot of companies have gotten into trouble. And so I hated the whole ICO thing. I actually kind of hated the whole STO thing. I'm a big fan of taking legitimate assets that everybody knows, right? Like bonds, and simply using the blockchain as a tool. We're not creating anything new here, right? We're just using it as a tool to make it a little bit more efficient, and shave off some costs to the investor and shave off some costs to the issuer, right? I mean, think about PIMCO, right? I think PIMCO manages something like $1 trillion in mutual funds. And if you were to take all those mutual funds and make a blockchain the transfer agent, which is, 5 basis points, but still 5 basis points of $1 trillion saves them and their investors a ton of money. And that's, on the investment side of things. Again, the use case around, creating a better planet through things like microlending, that's another use case that makes a lot of sense. But the STO and we're creating something new. That's always been a, you know, a big thorn in the side of this industry, and slowed it down quite a bit in 2017.
Yeah, mine too. I was talking to Faris 2015. I said, come on, Faris, let's just create this 2-page PDF and we'll have millions of dollars. But I'm kind of glad we didn't do it because the SEC would have come a knocking.
Yeah, that's exactly right. And they did. And they're still doing it. They're still coming a knocking to a lot of people.
Go. So, Stephen, can you tell us about 3IQ, please?
Yeah. So, 3IQ is actually one of our portfolio companies in our fund. Really interesting company up in Toronto, and it's veterans of Bay Street, which is the Canadian Wall Street, for those that don't know, and they have actually just listed the very first Bitcoin fund on a Canadian exchange. So that was quite interesting. That I think that it just got listed today. So really, really proud of what those guys are doing, and they're also involved in creating Canadian stablecoin that's listed on several exchanges as well. So really innovative guys that are doing cool things in Canada.
I could still go on for ages. Like you brought up the US dollar before, the petrodollar, and like I could ask you about Triffin's dilemma, all these other things. If you have the time to, it's up to you, Stephen. We can keep going down these rabbit holes for ages.
We can talk about whatever you want. I mean, oil is really interesting to me right now. I don't know if it's interesting to you.
I'm seeing oil as the buy opportunity of a lifetime coming up. Actually, I don't know how you feel about it.
I was looking pretty intently at oil 10 years ago when we had the first, or the last Great Recession. I was looking at oil and seeing, we had all these programs that we had in the U.S. where, cash for clunkers, trade in your old car, get a fuel efficient car. It was also during that time that I bought my first Tesla. And I was seeing that, electric vehicles were becoming a real thing, in 2011 and 2012. And at the same time, we were going through this revolution in the U.S. where we were fracking and oil production became extremely efficient. At the same time that we had more, fuel efficient vehicles. So it created this really interesting supply demand dynamic where if you know anything about the oil industry, around that time, Cushing, Oklahoma, which is where most of the oil in the U.S. was stored, was running out of capacity because there was so much supply. And there's also laws in the U.S. where they can't really export oil to other countries, so they were putting it on shipping containers outside of Houston just to have a place to put the oil. So anytime you have a supply demand inefficiency like that, oil obviously drops. So I was at Guggenheim at the time, and we were looking at that pretty intensely, and we're like, oil's over $1 a barrel. It's possible that it could go to $25, which is kind of insane, and people thought we were crazy, but it did. We're at an interesting time right now where there's just zero demand for oil, and a lot of people believe that oil can't go below the price that it costs to produce it, which is about $23 a barrel in the U.S. or about $26 a barrel in Canada. And by the way, much cheaper in other places in the country where they're basically importing free labor, as a way to put it, in places like the Middle East. So can oil go below the price that it is to produce it? I believe absolutely so, because I think a lot of oil companies are becoming zombie companies in and of themselves, where they're simply selling and producing oil however they can, just to make their debt service, which is really unfortunate. I don't know if oil will recover to, over $100 a barrel like it has before. Maybe to the $40 to $50 range eventually. But as we talked about earlier, human behavior has changed in the last month, and they're going to have long-lasting effects. So I don't know how often people are going to get back on a plane and travel, which is a huge driver of demand. I don't know if people are going to leave their houses as much as they used to, and get into their cars and drive. Obviously there's, delivery of goods has really picked up, which actually is less efficient than, a lot of other methods, but, that's going to take energy as well. So, I don't see it going to its highs. I see technology to produce oil continue to get more efficient, and I see alternatives coming in. But yeah, I think you can get a nice double out of it from here. But it might get worse before it gets better.
Yeah, no, I agree. And this is a very elemental theory. I haven't put that much research into it, but to me, the idea that expensive oil is what would fuel research and development into being more efficient with it. Whereas if oil is cheap, then people go, why bother with an electric car? Why bother recycling? I don't know how you feel about that supposition.
Yeah, it's really funny because I do have an electric car and I have a gas car. And when I've had to, go pick up things at the market or other things, I debate. And this is the problem that I have as an investor is everything is a, investment decision in my life, whether it's, driving to the market. I'm like, okay, well, it's slightly cheaper for me to take my gas car and sell on some days than it is my electric car. And it's funny because I'm constantly making those decisions in my mind. Whereas, 2 months ago, it was always a no-brainer. You take the electric car.
Well, according to Adam Smith, that's how everyone is thinking all the time about every decision they make every day.
Yeah, that's exactly right. I probably beat myself up over it a little bit more than others do. But also, I'm still the guy that picks up a penny off the ground when I see it. So,
do you want to learn how to safely buy and securely store your Bitcoins? CoinCompass.com is running a free 2-hour webinar on Sunday, 31st of May. To register and for more details, visit coincompass.com/webinar.
So, Stephen, I've really enjoyed our macroeconomic whip around the world, and we are Bitcoin educators here. So, primary goal of our business is to teach people how to buy Bitcoins and securely store them. So, all the stuff we've been talking about, how does Bitcoin actually fit into this macroeconomic world we find ourselves in today?
Yeah, well, I have my beliefs, right? And we talked about this earlier in what Bitcoin should be and what I think it is. And by the way, I would love to have a great peer-to-peer electronic cash system eventually, in the world. And we also talked about what I believe that it's become and what people are using it. So as an investor, I have to look at it as a speculative instrument and look at what other people are doing and how other people are thinking and buying it. And, I think in the short run, markets are going to continue to go down. I know we've seen, a lot of people have been cheering that the S&P and the Dow are out of bear territory and that it's recovered. It hasn't, and Bitcoin's recovered, which I don't believe it has either. I believe in the next 30 to 45 days, we're going to see economic data that comes out through quarterly reports of companies as well as labor reports that are going to be very dismal. And it's not going to be Q1. It's going to be, Q2 and even things that we didn't know about Q4, which I believe is going to drive markets down much, much further, probably somewhere in the range of 30 to 45% lower, which is going to have an effect on all risk assets, including Bitcoin. So I don't think we're out of, bear territory yet. Bitcoin itself, I think if the S&P goes down 40%, then Bitcoin goes down 50 to 60. because it is more liquid and it's more risky. But after we see that and we start seeing a recovery, I do believe that people are educating themselves in it right now. There's more and more buyers, and I do believe that when everything settles or the dust settles, it'll probably have the opportunity to run up faster than a lot of other risk assets, just as it went down as much as other risk assets due to the volatility. But I'm not ready to pull the trigger on that just yet.
There's no V-shaped recovery. Is that what you're telling us?
Yeah. Well, you know what? One day there will be, but I think it's many, many months, if not years ahead.
Yeah, there's no Bitcoin plunge protection team.
Yeah, that's right. That's exactly right. There are some really strategies out there that I've seen that are, there's a group called Sarson Funds up in Indianapolis that has a really interesting covered call strategy on Bitcoin. I think some of those types of things are very interesting, where you can protect your downside, and then as it's flat or going up, you're earning income. So yeah, there's some interesting strategies out there to protect yourself, but we'll see.
So I have a question, Stephen. Sorry, Faris, you go. So a lot of our audience are retail investors, and we basically show them how to safely buy and securely store. So they're talking about buying on an exchange and maybe transferring it to a ledger or some sort of hardware wallet. From your perspective, you don't have to give away your secret sauce, but are you guys actually taking physical delivery, custodianship of, for example, Bitcoin or digital assets, or are you using a third party, or what are you guys doing?
Yeah, that's actually a really good question. Because of some of the regulations in the U.S. and Canada, if you're an investment advisor, an asset manager, you actually aren't allowed to hold physical assets, self-custody them on behalf of your clients. So what we do is we utilize tools that are already out there that come in the form of funds, and this is sort of the value of having companies like 3iQ, with a publicly listed fund or other funds that we can invest into. They handle the custody through, say, somebody like a Gemini, or other approved custody agents. So that's how we operate through our fund from a regulatory standpoint. Personally, I do other things, and but that's actually a hard thing too. I mean, I'm really glad that you guys have this series where you educate people on how to buy and secure, because it's very important. It's something that if you were to ask me to teach you how to do it, I would fail, right? I actually have a security specialist that I work with that has taught me how to do it and does a lot for me. So and that's actually a problem with Bitcoin for the masses too, right? Is it's not quite there where you can very easily buy, hold, secure, own your own keys all at once. It takes education, and I'll be glad to see when other programs are in place or other code is being written or other people continue to help people do that. I think that's when it'll get greater mass adoption.
Yeah, I find some of these alternate solutions, like I'm not sure if you're familiar with, say, the Casa node or some of these other sort of, plug and play kind of node. You're smiling. I don't know if you use them or not.
No.
But
It's interesting to us because there really is no one size fits all, not to mention the fact that $100 worth of Bitcoin or 100,000 is different, but also technical ability, where you're going to store it. Are you going to use multi-sig, hardware wallet? And now we see this revolution in, say, these Casa nodes or this type of thing where, it's a Linux server, basically. You plug into your home and that kind of stuff. And it's like, well, we're kind of reinventing the wheel. We're sort of going back to digging a hole in the backyard, putting gold in it. So I find it fascinating, these custody solutions. Some of them are inventive and innovative. Some of them are going 10 steps backwards.
Yeah, that's right. And and there are a lot of people out there that are scrambling to buy and hold it for you, which is great as a speculative instrument, right? But if you're really buying and holding it for what it was originally intended for, if you don't own your keys, you don't own your Bitcoin. So that's really something that the population is going to have to be educated on before it can really take off for its intended purpose.
Well, hopefully that's what we're doing, Faris. And we've actually got a free webinar to show people how to buy it and how to store it securely. So there's a quick plug.
I'll attend.
Yeah, there you go. coincompass.com/webinar. There you go. Free ad. I've got a serious question for you now, Stephen. Do you still drink Tenzo tea?
Of course I do. So, Tenzo Tea is a personal portfolio company of mine that I'm an advisor for. It's a great group of guys in the LA area. They're all they all went to UCLA. They were all on the volleyball team together, and they dropped everything that they were doing, including one of the partners who's 7'1", about to go on the AVP tour, and decided, no, man, I'm starting a business. So these young guys that are just out there hustling, selling tea all over the place. They're a great matcha tea company. So nice little plug for those guys. But I love finding guys like that hustle that are half my age.
Did you ever consider changing the name to Blockchain Tenzo Tea?
Well, I'm not the founder. I'm purely an advisor and investor. But no,
Tenzo blockchain. That sounds good. I like it.
Yeah.
Are there any projects that you're excited about, whether they're blockchain coins or whatever, or businesses? What sort of gets you up in the mornings?
Yeah. So look, I'm really enjoying what I'm doing with the guys at Exponential. The co-founders are fantastic human beings. Everything that they do is with purpose. They want to do things right. They want to make the world a better place. They want all investments to be, net positive, if not net neutral to human beings, alleviate world suffering. So those are really the tenets of the company. And so I get up every morning excited working with them. I've also been helping a co-founder of mine for my, I started a company about a year ago that got acquired, or over a year ago now. It was a long time ago. It got acquired almost a year ago now. But my old co-founder from that company, he's been working, very diligently on a payments platform. It's a global payments platform that focuses on, freelancers and 1099 workers. Which I think is where the world's moving. People don't want to sit in a cubicle all day earning a paycheck. And I think they're more efficient too. So he's been, really building a very interesting software that allows you to transfer money instantly all over the world using blockchain technologies in some cases, but primarily here in the U.S. just using cash and being more efficient about the way they do it. Gearing it towards 1099 workers and freelancers as opposed to, somebody earning a paycheck every 2 weeks. So that's been a lot of fun as well.
Awesome. Are we going to see a PayPal dollar, do you think?
I think we will. I think those things are coming very soon. We'll probably see a renminbi digital currency before we see anything else, and I think they're racing to be the next global medium of exchange after the dollar, and we see them really focusing on emerging market countries that they're doing trade with to do this in. So I think the rest of the world is going to have to catch up.
So just on that, is this Fedcoin digital dollar, maybe giving your you have to download the app, to get your unemployment benefits. Is that a reality, or is that just we're talking, 10 years away?
I think we're less than 2 years away.
Wow.
I really do. Yeah. If not even sooner.
That's fascinating, because we were talking about this recently of how life imitating art, because this all happened years ago in the TV series Mr. Robot. Exactly this.
Yeah, that's right.
Bitcoin.
Yeah. Well, look, I mean, the technology's there right now. I've actually seen some really interesting wallet solutions that have the ability to be downloaded and utilize digital dollars. Really the question is, it's probably more of approval through the right regulatory channels in the U.S. And there are interesting, interesting code out there for digital dollars that can be transferred, immediately. So yeah, I think if people get through regulators, I think it could happen very quickly. I think that's probably the biggest holdup. A desire, a political desire to do it.
Because this was actually launched in India a few years ago, the Aadhaar system, if I'm pronouncing that correctly. And there's some conspiracy theories out there that the U.S. was actually involved in that.
Oh, I don't know anything about that one. That's interesting to hear.
Yeah, as you said before, it's regulation and social acceptance. I mean, there's no reason why there couldn't be a Fedcoin. It's not a technological reason. You could download Bitcoin today, instead of 21 million, make it unlimited, and instead of having decentralized 10,000 miners, you have the Federal Reserve. They're the only miner. Yeah.
Well, the other thing that's interesting too is, I mean, I don't know if you've played around with Coinbase at all. Coinbase is got a really interesting wallet solution and really interesting API to plug into. And I can send, USDC to people in, Thailand or Philippines quite easily, within seconds, using Coinbase. So, there's a lot of capability out there. There really is. Just, there's got to be, like I said, political desire and people have to have the desire to want to be able to use it. My barbershop is a good example. They've been accepting Bitcoin for 3 years. And one day I asked my barber, I said, how many people pay you in Bitcoin? He goes, well, nobody. But we thought it'd be a really cool marketing thing. And I was like, well, why do you think that is? He's like, it's just too complicated. People want to pay me with a credit card. It's faster. And I was also thinking to myself, it's like, well, the true Bitcoiners aren't going to pay you in Bitcoin. They're going to hodl it. Right. So, so that's the other issue, right?
It's like Gresham's law, I think it is. You get rid of the bad money before the good money. There's no way I'm paying for a haircut in Bitcoin.
Yeah. Yeah, that's exactly right.
So we just had a podcast. Sorry, Stephen.
Oh no, I was just going to say, well, it acts a lot like a commodity, right? And you look to the famous periods of time where commodities went up in value very quickly. People don't sell them if they have them. People. There's the famous picture of the person hoarding all the cotton in their house, and their house is overflowing with cotton because the price of cotton went up 3x in a matter of a week. They're like, well, it's going up in value. I'm not going to sell it. I'm going to wait until it has maximum price, and then I'm going to sell my cotton, right? Or tulips, or whatever commodity that you have at the time. So Bitcoin's kind of the same type of thing. If it's going up in value, people are going to hoard it. If it's going down in value, people want to get rid of it. And and those are really the two things that are preventing it from peer-to-peer electronic cash usage.
So it's interesting you say that, because, I mean, us in the Western world, we're used to 2-3% inflation. But if you ask someone in Zimbabwe or Venezuela, they can't get rid of their cash quick enough. There are some people who are waiting in line for the supermarket, and every 5 minutes the cashier has to, call up someone to check what the new exchange rate is. So in the West, we just don't really see that. So we actually just recently did an episode on Bitcoin adoption and perhaps why merchants haven't been adopting Bitcoin yet. Do you think it's just because of that? If you're a barber, It's totally a marketing ploy, which is great. That's fine. But let's be honest, that barber is probably either converting it straight back into cash on Coinbase or some sort of wallet. They can't pay their suppliers, their vendors in Bitcoin. So they don't really want to hold it unless it's just, a few extra dollars here or there. Why do you think we haven't seen, say, retail merchant adoption of Bitcoin?
Yeah. Well, it's really interesting because I was having this conversation actually with Peter McCormick, who I think was recently on your show as well. We were in a undisclosed location drinking Mai Tais by a pool. But we were talking about, is there really, are there really people in South American countries, like what you hear rumors of, right? Where people are buying eggs and milk and bread and other staples using Bitcoin because the currency is so out of hand. And we're talking about, are these people really buying Bitcoin and hoarding it? No, if they're getting Bitcoin, which they're probably not, but if they were, they're not holding on to it. They're instantly converting it to their local currency because they have to eat that day. They have to pay rent that day. And he actually did some investigation and found out that no, there really isn't many people even utilizing or buying Bitcoin in some of these places. One of the other things too was if you go to Miami, you notice there's a lot of Bitcoin ATMs. And the speculation is the reason why there's so many Bitcoin ATMs in Miami is because as people are fleeing countries like Argentina and Venezuela, which has been the case for a couple of years now, they're converting everything into Bitcoin to get it out of the country, coming to Miami and then converting it to cash. Well, little further investigation there. It's not as rampant as people think, but it is happening. So next time you talk to Peter, you should ask him about that.
Mentioning Miami, I thought you were going to mention money laundering or something like that with these two-way ATMs depositing and withdrawing Bitcoin.
Yeah, I'm sure that's happening as well. So, but yeah, well, here in the U.S. and to really address the question on why aren't merchants taking it and why aren't people buying Starbucks with cryptocurrencies, it's very simple. It's the tax treatment. So if I buy Bitcoin, let's just say I buy $5 worth of Bitcoin and it turns into $10 worth of Bitcoin, and I go buy a cup of coffee for $5.76, then I have to pay taxes on the appreciated value of that Bitcoin in addition to my coffee. And by the way, blocks are only created every 10 minutes, so it's slow. It doesn't happen instantly when you make a purchase. Or I can use my Starbucks card, earn rewards, not have to worry about taxes. What am I going to do, right? I'm going to use my Starbucks card, my Starbucks app when I go to Starbucks. So yeah, it makes it really tough. I mean, there's that company called Lolly that I was looking at them, and they're giving Bitcoin rewards for buying things. But it's also the same type of problem. They try to solve that problem, but you still have to pay weird taxes on your appreciation, which just makes it very difficult to use for merchant transactions in the U.S.
Yeah, absolutely. My dad's an accountant, and we were talking about this the other day, and it is a complete nightmare. In Australia, I think it's quite different. You're treated as I can't remember what they treat it as, but it's a different kind of asset. It's like you pay capital gains, but there's some other stipulation as well. And it's just like, not to mention the fact that if you're a trader and you've done 1,000 trades, and I know there's software that can hook in, APIs to exchanges, but it's like, if you're using 4 or 5 exchanges and whatever, that's a total nightmare.
It's very difficult.
Well, last year, the Australian Taxation Office actually sent out a survey to people who invest in Bitcoin, basically saying, how do you want us to treat this thing? And people responded. So,
well, it's funny because I think guidance only came out in the U.S. like maybe a couple of years ago, but most of us that kind of, that came from, professional money worlds, whether it's accounting or finance or we all just understood that that's what the guidance was going to be, and that's how we all treated it anyway. Yeah. And sure enough, that's what the guidance was. So, we were always very cautious.
There was a letter sent out by the IRS. Have you traded in Bitcoin in the last year? Yes, no. Pretty straightforward.
Yeah, that's right. Yeah, and a lot of people before 2 years ago didn't even report it. I reported it. Every year I traded it, but you don't have to report it necessarily when you buy it, but when you sell it, and so yeah, that also makes it very difficult.
And this is why you're seeing some countries basically promote themselves as Bitcoin havens. Move here, sell your Bitcoins here, we won't tax you for it.
Yeah, that's exactly right.
Stephen, this has been there's a few more.
This has been incredibly educational and entertaining for us, Stephen. We really, really appreciate it. And you made I won't call it a prediction, but 30 to 45 days from now, some interesting things may be happening. If you're still free, we'd love to do a follow-up with you then.
Absolutely. That way, when I'm wrong, you can point out all the places I was wrong. That'd be fantastic.
Not at all.
But do you have any final thoughts, questions, anything you want to mention before we sign off?
No, look, I really, really, really enjoyed spending time with you guys. Had a fantastic conversation. Really appreciate you taking the time and having me on your show. It's I look forward to what comes out from you guys over the next few weeks.
Thank you very much, Stephen. We'll link to your Medium article in the show notes of this episode. But where can people find out about you?
Yeah, Twitter is probably where I'm most active, at Stephen McClurg. Pretty simple.
All right, we'll boost up your followers. Well, thanks again. We'll maybe chat to you in a couple of months' time.
Fantastic. Thank you very much.
Thanks Stephen.
You guys have a great day.
Thanks for watching or listening. Please visit coincompass.com/free to register to our socials and discover other free content. Subscribing, liking, and following helps this content remain ad-free. Until next time.